Once you identify your structural story in the market, you will learn exactly where you lie in price. You will no longer sit blind in the market. You will have that crystal clear clarity understanding of exactly where expectational order flow is going to go. If you go and practice marking this out on your chart, it becomes second nature and you will become undefeatable in the market. In today's video, I'm going to show you a 3-box methodology that I've revamped into my own way that has allowed me to achieve hundreds of thousands of dollars in funded accounts and payouts every single week from a various amount of prop firms that is documented in my Discord community. In today's video, we're going to be going over a different type of methodology that will help you understand your structural story crystal clear through the form of 3 different types of boxes, identifying your comp firms with your S&D zones, with all put together in a simple 3-box methodology system. So if we take a look at Euro USD over here, we've had beautiful playouts of order flow in the last 3 months, shifting the market from bearish to bullish. Remember, there are many different ways that you can go and trade. This is not going to be some magical holy grail system that's going to make you millions of dollars. You do need to hop onto your charts and practice seeing this for yourself before you can just go and tackle it in live action and trade it live. On Euro USD, if you take a look at these boxes that I've highlighted on the chart over here, this is not an indicator, this is manually marked out. I've been trading for over 4 years, so this has become second nature to me, which is exactly what I'm going to help you with today. So even if we go way back to March 2023, price always follows structure and order flow through the movement of these 3 boxes. All right, so price will have that breaker structure of the box, that pullback into relative areas of price action in the previous box range, will then continue to target these weak highs, will form a new box range. I'm going to go over with you on how you can highlight these boxes yourself. Price breaks the box to the upside, has that pullback into areas of relative price action in the previous box range, has that break of structure to the upside, that pullback into relative price action of the previous box range, looking to target those weak highs. And if we continue following this order flow, price then continues to print these new boxes. Price then shifted bearish with a break of structure to the downside, that pullback into areas of relative price action into the previous box range. If we keep following this over here, price formed that new box over here. Price continued to break structure to the downside, pullback into areas of relative price action in the previous box range. Price then forms that new box, break a structure to the downside, pullback into areas of relative price action in the previous box range. New box is formed, break a structure to the downside on a lower time frame with that pullback into areas of relative price action to continue breaking structures to the downside. A new box range has been formed. We then had that break a structure to the downside, pullback into areas of relative price action and discounted areas of the previous box range. But also, if you take a look, price printed a new box and broke that box to the upside. So that signals we have now had a bearish to bullish shift in EU as of Friday, 2nd of June 2023. So now our expectational order flow is to pull back into the previous box and areas of relative price action in the previous box range to continue targeting these weak highs. Break a structure to the upside, as exactly according to expectational order flow. Price then pulls back into areas of relative price action in the previous box range. Price forms that new box. Break a structure to the upside, pullback, new box, targeting those weak highs. Break a structure to the upside, pullback, mitigating areas of interest in the previous box range. Break a structure to the upside, forms that new box. Pullback, mitigating areas of interest in the previous box. New box, break a structure to the upside. What can we expect is that pullback into areas of relative price action in the previous box range to continue targeting these weak highs. So we have had beautiful play of order flow and overall structure in the markets on EU over the last couple of months throughout one of the most brutal high impact news years so far in 2023. I always like to say news is the excuse to move price in the direction it was already going to go. So if you take a look at last week, we had brutal news pushing EU up close to about 2,000 pips. And if you take a look at order flow, all it was box structure, breaker structure to the upside, that pullback into areas of price action of the previous box to continue that bullish order flow. So once you understand your overall structure story, obviously there's going to be confirms and S&D zones within here, which is going to lead us to our second box, because this is the total of 3 boxes, which then catered beautifully for the brutal news week that we had last week. And if you've been through a few SMC mentorships before, you would have noticed that price is taught to you in the form of either it moves in higher highs or lower lows. And it's one of the most hardest things to identify, because most people can't get it right, but once you understand how to do it, it becomes really easy and second nature to mark out on your chart. So all these boxes is a form of your order flow with weak highs, strong lows, higher highs, higher lows, looking to target these weak highs. All this is a simple continuation of order flow and where expectational order flow is going to go. Let's put this into a more rule-based and mechanical system for you to go and follow. So initially we have our first box, which happens on the H4 time frame. So hop over to your H4 4-hour time frame, and all this simply is a continuation of highs and lows. And your boxes is just a clear form of structure that is printed to you. So how you go and mark this out is through the forms of your swing structure. So what I'm going to do is I'm just going to quickly remove all of these boxes and just follow with me over here. All right, so at this low, we had a breaker structure to the downside with a body closure, which we can go and label as our 4-hour breaker structure, which was created by the most recent high, which this then becomes our strong swing high. And all you go and do is draw a box from this high to low, and that's your first box. All right, so price then had that breaker structure to the downside, which then over here, this most recent high becomes our new 4-hour strong high after price has that pullback with an internal breaker structure to the upside, which I will go over with you just in a bit. And in the private mentorship, we then draw a box from that high to the low. And there we go. We have that breaker structure to the downside with a body closure, that pullback into areas of relative price action of the previous box to continue breaking structures to the downside. So let's continue following this. All right, so we can remove the strong high because that's our most recent strong high. Price then had that breaker structure to the downside over here with a body closure, which was caused by the most recent high over here. So this was now our 4-hour strong swing high. So here is our new box from that high to that low after that pullback. So this is our new box range. Price then had that breaker structure to the downside over here, which was caused by this most recent 4-hour strong. So that 4-hour strong eliminates, this becomes our new 4-hour strong. So over here, we now draw that new box. Price then had that 4-hour break of structure to the upside. So our expectational order flow now is for price to pull back into relative areas of price action in the previous box range to continue targeting these weak highs. So all this is following your labels. So this is now our new 4-hour strong. So the weak lows have now turned to strong lows. And this becomes our 4-hour weak high. So now this becomes our new box from this range to that range over there. All right. So price then had that 4-hour break of structure to the upside. This then becomes our new 4-hour strong low because that was the most recent low that broke the previous week high. All right. So price then pulled back into areas of relative price action in the previous box range to continue targeting these weak highs. So over here, we had that pullback. So this then becomes our 4-hour weak high, which we had this break of structure over here, which was caused by this 4-hour strong low. So this now becomes your new box right there from that high to that low. Price had that breaker structure, pull back into areas of relative price action in the previous box range to continue breaking those structures to the upside. So over here, we had that breaker structure, which was our 4-hour boss created by this 4-hour strong swing low. So over here now becomes our new box. From that high to the low, price has that breaker structure, the pullback into the previous box, and then break structure to the upside over here, created by this 4-hour strong swing low. This becomes your new first box of your 3-box system. All right, so price has now had that breaker structure to the upside. So what is expectational order flow? Is to have that pullback into areas of the previous box range to continue targeting these weak highs. So this currently would be your H4 week. So your most recent box is from this high to this low. So if price has that breaker structure to the upside, expectational order flow is to pull back into the previous box range, mitigating areas of interest to then target these weak highs. Until price has that breaker structure to the downside, then only expectational order flow shifts to then target the weak lows. So all this is, it's a reaction to what price prints you, and it's a much simpler methodology of identifying your structural story to then on the lower time frames look for confirmations, but understanding your overall higher time frame bias and expectational order flow, and understanding if price is looking to target the weak highs or the weak lows. So this is how we identify box number 1. To go and identify box number 2 is hop over to the 15-minute time frame. So this is a very mechanical set of rules. 4-hour time frame is box 1, 15-minute time frame is box 2. So now all we need to go and do is refine the overall high time frame box to a lower time frame smaller box, which is very simple. So I've got a little indicator that goes and helps me with this. You'll see over here. Let me just make them a little bit darker. Under the settings, I'm going to give you this indicator now. There we go. So all of these boxes over here are our second boxes. All right, so the first and foremost, the first thing you're going to look at is which box has caused the most recent breaker structure to the downside. So over here we had, if we continue back from the 4-hour where we were over here in the end of May 2023, by the way, this indicator is called HTF Candles by Infoman Nerd. You can go and copy my settings over here. All it does is it highlights every 4-hour candle in the form of a box on the 15 minutes. You're going to go and look for the box that caused the breaker structure to the downside. So over here we had that overall breaker structure to the downside of our high time frame box, which then allows us to go and mark out the most recent box over here. Let's just go and make this pink. That broke structure to the downside. Price then pulled back, mitigating areas of supply up here with a bit of a sweep. We'll then print some kind of confirm. I use M confirms, which I'm going to go over. That will be box number 3 to then continue targeting these weak lows. So let's continue following this. All right, so price had that breaker structure to the downside on this box over here. The most recent box that caused that break was this box over here. From this high to this box low, you can then just go and drag another box across. All right, so price had that breaker structure to the downside on the high time frame box, pulling back, mitigating the previous most recent refined box in the higher time frame box to then continue targeting the weak lows. All right, so price then had that new box formed, breaker structure to the downside over here, which was caused by the most recent box, which price had that pullback mitigation into this box to continue targeting the weak lows, which then formed our higher time frame box. Price then had that breaker structure to the upside. The most recent box that caused that breaker structure to the upside was this most recent box over here and the extreme box down here, which price obviously decided to come and mitigate further into the extreme box, which then price gave that beautiful confirmation, which was caused by this most recent box that broke the lower time frame structure to the upside. Price then pulled back into areas of interest of this previous box to then continue targeting the weak highs. All right, so price then had that breaker structure to the upside of the overall high time frame box. The most recent box that caused that breaker structure was this box over here. Beautiful 50% mitigation to continue targeting those weak highs. Same thing over here. Price then had that breaker structure to the upside with a 4-hour body candle closure, pulled back into the refined box of the most recent box that caused that break over here and over here to continue targeting those weak highs. Same thing again. The most recent box that caused the breaker structure to the upside, price then pulls back, mitigates this box to continue targeting the weak highs. So over here right now, what we have is the most recent box, which would have been this box over here, is for price to pull back, mitigate areas of the previous overall 4-hour box range, and the pink is our 15 minutes refined 4-hour box to then look for longs. So we've now, on Euro USD had that structural shift to the downside, which is our M15 breaker structure, which was caused by the most recent box over here, which price has pulled back, mitigated this box, which then expectational order flow is to continue moving low to mitigate areas of the previous 4-hour box range to target the 4-hour week highs. So that is currently expectational order flow on Euro USD as of the date that I'm making this video. So that then allows us to label box number 2. So box 1 is 4-hour range, as I explained in this video. Box 2 is the 50-minute refined H4 box. So obviously, if you want to go and look to target real low RR kind of trading, it would be valid to go and look for entries, just risk entries off these boxes. So over here where that breaker structure, the pullback into the 50% of this box, stop loss below the low to go and target the 4-hour week high, 2.8 risk to reward. Now how we go and determine our next box for refinement for much tighter RR is once price has that pullback into the box, we follow our fractal structure, which is these simple dots over here, which is our fractal highs and lows. Again, that is an indicator just called fractals. If we keep following our fractal structure, after that pullback, okay, price had a mini pullback, which then broke structure to the downside, which this fractal high right here broke this fractal low to the downside. All right, so price then had that pullback into the previous fractal range, that breaker structure to the downside. All right, so let's keep following this caused by this fractal high. Price had that pullback respecting the previous strong fractal high, but couldn't break the most recent fractal low, and instead broke the fractal high to the upside. Right here, so here is our fractal shift to the upside, which indicates that price has now respected the previous box range, ready to go and target the overall week highs. All right, so this breaker structure to the upside was caused by this fractal low strong. So this we can create as a fractal low. This was a fractal boss. And this was our previous fractal range. Within this fractal range, we have smaller fractal structure, which over here was a fractal high and a fractal low. And ideally, you want to go and mark out this fractal range and refine this down to the fractal range within the overall fractal structural box, and this then becomes our third box. Price then comes back, price has that fractal boss, the pullback mitigation into the previous fractal range, which would then be valid to go and look for confirms over here with your stop loss below the low to go and target the overall week high. So now take note of how you've come down from a 1 to 2 risk to reward to a 1 to 16 risk to reward. And then fourthly, what I also use is entry confirmation. If I bring back the chart just to this area of price and you hop over to the 5-minute, what you're going to look for is a triple M entry confirmation. All right, so price had that mitigation into the refined fractal demand zone, printed a valid triple M with this green wick. All the triple M is a lower time frame triple break of structure to the upside, indicating that this point of interest is going to hold with multiple structure shifts to the upside to then target the overall higher time frame expectational order flow. So now you've gone from, let's say, a 50% entry on this, just a risk entry on the overall previous box at the 50%, from a 1 till 3 risk to reward. All right, from a 1 to 15 risk to reward, or 1 to 15, all the way down to a 1 to 44 risk to reward with a triple M confirmation. So triple M is my favorite SMC entry confirm tool, which indicates that a supplier or demand zone is going to hold with a triple break of structure to the upside on the 1 or the 5 second time frame. So this would have been a 100% valid trade, understanding, all right, so price has had that breaker structure to the upside from the previous box range. Price is in that pullback phase, mitigating areas of interest and areas of relative price action in the previous box range. Price prints that M15 breaker structure to the upside from this high to this low, had that breaker structure, which then price has that pullback into the most recent box that caused that breaker structure to the upside with a body closure All right, and then all we go and look for is fractal highs and lows, which we then had that fractal shift to the upside created by this fractal box over here, which was refined down to this fractal supply. Price mitigated that fractal supply after the pullback with a triple M confirmation, looking to go and target the overall week high. So if we had to go and play this out, this is how that trade would have played out. As expectational order flow is to go and target these week highs. And right there, that 4-hour week high was now taken out. If we had to go and practice one more example, all right, so price had that breaker structure to the upside of the overall 4-hour box caused by the most recent M15 refined box. Price pulled back, mitigated the 50%, and all we go and do is follow fractal structure on the 15-minute time frame. So here we had that fractal breaker structure to the downside, mini pullback, continuing to target the week lows. All right, so price then ranged over here, no real structure, until price had this breaker structure to the downside, caused by this high. So that is a strong high. Price had that pullback created by this week low. So expectational order flow here was for price to respect this strong high to target the week lows. However, price had that breaker structure to the upside, which is that bullish shift, indicating that this previous box and demand range is going to hold, continue targeting the week highs, which then if we had to go and refine this, which we had this box range over here. So price had that breaker structure that pull back into the previous box range to target the week highs. If we had to go and refine this, within this, we have a fractal high over here to this fractal low. So this box just gets refined down to this box over here, which price mitigated just on the wick. And if I had to bring back price over here, let's see if we got that triple M. We did indeed get a triple M confirmation. So over here, instead of entering on the entering of the zone, which you could have if you wanted less RR and just slightly bigger stop loss for more breathing room, you could have caught a 1 to 3 risk to reward. Or if you take triple M's like I do, and as taught in the Millionaire Mindset Funded Discord and in my community, is I would have entered on a triple M, stop loss below the wick, and now we've gone from a 1 to 3 risk to reward to a 1 to 8 risk to reward. That's how that trade played out. Understanding that our higher time frame structure story is to go and target these 4-hour week highs. I understand this may be quite a bit to take in, especially if you're new to smart money concepts and the way that I trade here at Millionaire Mindset Funded and how I trade full-time as a living. Is of course each and every person understands the market in their own unique way. So this is just my personal way of how I understand structure, how I mark out my expectation of the order flow, which allows me to catch really tight risk to reward trades, such as these examples over here, and how you can go from 1 till 3 risk to rewards all the way down to refined 1 till 40 risk to rewards. And all this is a continuation of order flow, higher time frame expectational order flow. So let's just quickly go and correct this. So box 3 is the refined M15 fractal structure. 3 types of structure, which is your 4-hour swing, M15 internal structure, and your 5 minutes and M15 fractal structure, is covered far more in depth in about 20 hours of videos in my private Discord community, where there's a private SMC and ICT mentorship where I go through all of these concepts far in depth. Our community has created well over 60 funded members in the past 4 months, utilizing these concepts, practicing the charts, identifying their structural stories, putting in the work, and ultimately getting funded with MM Funded. So if you want to get access to this Discord community, I will leave a link down below in the description of this video, which there is a introduction video over there, which will go through everything that is in the Discord. So I recommend read through that page, understand what you're getting access to, understand that this is not some kind of holy grail or magic fairy dust that is now falling out of the sky onto your lap that is going to make you millions with trading. This requires work. This requires practice. It requires practice seeing your structure story on your chart over days and weeks and months. Remember, I've been trading for years on end since 2018, 2019, which took me years to master structure, supply and demand, confirms, understanding where expectational order flow is going through the indicator phase, going through the support resistance phase, going through the Fibonacci level phases, Every single trader needs to go through those phases, and that is why I have created this community, is to shortcut all of those phases and give you access to the right price action content and strategies early in your trading career. So without further ado, make sure to click on that link in the description of this video, and I'll see you on the inside.